traders, welcome back to my channel. In this video we are going to be looking at this powerful entry technique which is known as the trendline strategy, right? So we are going to be looking at how you can use your trend lines. Trend lines are very nice ways in which you can catch very high risk to low ratio trades. After price rejects from a zone once, twice, we will turn to place our pending orders. So if you understand trendline strategy, when price reject from a zone once, twice, the third time price comes back, that zone acts as diagonal support or resistance depending on the trend of the market. So we can place pending orders and wait for price to execute. We end up with very high risk to reward ratio trades, right? So basically this is a very simple strategy, but there are some things most trendline traders are doing some mistakes in which I'm going to share with you guys. So basically in this series we are going to be looking on how to draw trend lines the right way, how to combine it with price action, how you can enter with confirmations, where exactly you should be placing your stop loss and your take profit. This entry model is going to help you win mostly, or help you understand the concept properly, guys. This will work especially when you are trading with understanding. So if you would like to always see videos like this, make sure that you support us by hitting on the subscribe button and notification bell. If this is your first time, please hit on the thumbs up button too, so that many people can come in contact with this particular video. All right, so make sure that you watch till the end. Basically, one thing you need to understand about trend line is it is a kind of way in which we determine the movement of price in trending markets, right? So basically trend lines usually act as support and resistance in a trending market. So basically if you see price creating series of higher highs and higher lows like this is known to be an uptrending market, right? So price will usually create an impulsive move, right, and then pulls back. Price will usually create an impulsive move and pull back. But now when price is about to pull back, right, where do we expect to be entering? We want to be entering at that pullback, but now we don't know exactly where to be entering. Trend line is one of those ways in which we use in trending market to catch those moves. So basically we use it as a diagonal support. In this situation, you connect the first high to the first low to this, right, and basically this will automatically act as support when price comes back to that zone, right? Many times when you draw it in a better time frame, price will usually pull back like this and then respect the zone, and sometimes you see that it creates a new high, right? Sometimes it will continue until the trend breaks. So at this point in time you can catch very good buy opportunity, or you can catch very good trades by getting a very high risk to reward ratio trade just by identifying this. So you need to understand how to do it properly. So in a downtrending market, we have a similar situation, price creating series of lows, right? We are going to be expecting price to be pulling back, but now we need to establish our trend lines, because that's what is going to guide us on where price could possibly be finding resistance, right? So at this point in time, if you connect the first high and the second, probably price is going to come back the third time. From the third time, right, we are going to be looking for sell setups, and many times if it is drawn in the right time frame, it's going to respect this zone, right? So that's one you need to understand about trend lines. So you first of all need to know how to combine it with price action, right, and then also market structure, so that you should know what is the trend. Now in this situation, if you look at this market situation here, let me just clear this out so that you can see. Now this is a situation where price is creating series of higher highs and higher lows, right? You can see here price creates a high, it creates a low, it creates the next high, and then it starts pulling back. Now you see now that here we have break of structure at this left hand side here, indicating that the uptrend is going to continue. So what you do in this situation is you use your trend line to connect. So basically you pick up your trend line like this, right? You pick from the trough, what we call trough, right? You connect. You make sure you click to get the touches. Many people do it wrongly. They click, or sometimes they don't get the touches, or maybe they cut across wicks, or they draw like this, right? You make sure that you get the touches. The first and the second touch is important, guys, because that's what is going to determine the movement of price. Because at this point in time, after price reject once and twice, just like horizontal support and resistance, this line here, this zone totally becomes it becomes a rejection zone. So basically price could coming back here to get rejection. So now what we usually do, sometimes we can wait for price to pull back to this zone and then get reject by what, forming a doji candle. Now you need to understand this kind of candlesticks where price comes and then reject, or sometimes you can place your limit order. Okay, you can just place a limit order by placing maybe a buy limit order around this trend line here. So you have to ensure that you are monitoring your trades, right? So you place a buy limit order, then we have stop loss below here, right? So basically you want to be targeting the first highs, right? The first high now in this situation means that we have this zone, which is the highest zone at the meantime. Or you can wait for price to come back there and then reject, and then you see that you are going to be in the trade. And then sometimes, most often, price is going to move right to your target if you understood the concept, right? So another way of entering is by what, looking for or waiting for rejection candle. Now let me cancel this and show you. All right, the reason why I said you need to get these touches properly, because if you don't get them properly, sometimes you could end up missing the move, thinking that the trend has broken, right? Maybe the trend line has broken, whereas it hasn't. You need to make sure you get the touch, right? So sometimes you could only wait for price. If you want to be more conservative, you can wait for something like that. Okay, so when you see that rejection below, this is more like an evening star candlestick formation, these three type of candlestick. So you need to revise your knowledge on candlestick patterns. So these three signs indicate what, a possibility of an up move. That's where you can possibly be taking your buys if you want to wait for confirmation, right? This same pattern, if you go now to a bigger time frame like the H4 for instance, you see that it forms something like maybe a doji or something, because basically this is a rejection and they moved up, right? So you see, basically that is what we want to be looking for. So at this point in time, you get a rejection from this zone here, you are probably going to be getting an up move, right? Because you have the first swing, the second and the third, right? That's why you see this candlestick doji. This doji indicates that price actually opened above, came right down to close, but failed to close below this trend line. What happened? The bulls, which are the buyers, actually pushed price up and it closed above here. And what happened? It indicates strong momentum. So at this point in time, you enter after this candlestick closes. It shows that what, the buyers are about to take control. That's how, if you take your buy, you see that price is usually going to move most often, right? And then you see that you are going to catch that move just by getting. So that's actually an aspect of price action, right, that we just try to combine. So that's basically it. Now in this situation, what you do is you just extend your trend line, because at this point in time, this trend line is going to act as what, is probably going to be acting like a kind of support, right? It's going to act as support, and this we usually refer to as dynamic support. This could not be horizontal. I mean, it might not be horizontal, but this kind of dynamic support, right? Because it is an uptrending market. So you want to watch for price to come back to that zone there. So basically, let's just play out and then see if price gets to the zone. And one thing to note is that trend lines that are this gentle, sometimes they are very strong, they are hardly broken, right? Sometimes it could be difficult for price to make it back to there, but when price make it back to those trend lines, it gives very good opportunities because they don't break easily. Trend lines that are very steep usually tend to break. Now for instance, now you see that price has come back and it hasn't gotten to this zone. So what do you do next? Now you see, now we have a new structure. This is a new lower low that have been created. Price has created a new higher a new higher high. So at this point in time, what are you going to do? You simply connect, right? You can just simply connect the new zone. You connect using the new zone. This is it, right? This is the new zone that have been created. At this point in time, this is another trend line, this is another support, this is support 1 and this support 2. All right, so you want to wait for price to come up because this is the first and the second. So at this point in time, you use the same methods that I've already explained. Either you enter aggressively by placing a limit order, or you wait for confirmation, right? So let's say we wait for confirmation and see, okay, price doesn't pull back. Right now we can go further to extend our trend line by what, drawing another trend line here. Okay, if you draw another trend line there, you are going to see that that is a new support. Now because of the nature of the trend, that sometimes where the trend of the market is too strong, right, price will not always come back to the initial trend line that you drew. So does that mean you are not going to trade as a trendline trader? You need to ensure that you are always trading. So at this point in time, just get the connections, right? Once you get the connections there, you wait, because this is the first and the second. As price comes back the third time, you want to be taking a trade. Okay, you want to be taking a trade from there, from the third touch. So let's just make sure that we get the touches, right? You want to get the touches. You can enter aggressively, Okay, now you can see, look at that rejection from this trend line. Now this is a bullish engulfing candle. This is a bullish engulfing candle that engulfs the complete body of this candlestick, which give what, another trading opportunity, right? So you might not always get many opportunities, or you might not always get markets trending perfectly, but if you get few good trades, you can catch very good risk to reward ratio trades. Okay, now look at it. Look at another thing I wanted to share with you guys. When you are placing your targets, right, usually ensure that you have your target at the previous high. For instance, here, right here, your target, if you entered here, for instance, your target should be at this previous high, because at this point in time, this was the highest zone. Let's say we were here, right? This was the highest zone, and sometimes price might not always break through this high, so sometimes it can go, comes back and hit, create, a double top and all of that, and then it comes back and then breaks out from the trend line, right? When it breaks out from this trend line, we can now be looking for what, short trades. But before we look at short trades, we need to get what, more confirmations, or if we are shorting, we should ensure that we are just getting to the level of this candlestick here. Now you can always switch time frames, go to bigger time frames, so that it can filter out noise, right? It can filter out noise, and then you are really sure of what you want to be doing. Okay, now you see that the price comes now and respect this trend line, right? You can see this trend line that we initially looked at, so price respected, and then you can see cash, you can connect like that, because at this time, this is the third time, right? And then it's still acting, you can see. So at this point in time, you have caught this trade, because you, even though price did not pull back to this trend line that particular moment, this zone remained a support zone. That's one thing you need to understand about trend line trading, right? So you should not delete all of the trend lines. It might not give you a setup now, but later on it could give you a setup. So even if it doesn't respect, it could break the trend line, comes back and retest, and then still give you a good sell, a trading opportunity where you can trade as what, a breakout. You get the point. So at this point in time, now you see that the price comes and break out, but now you need to pay attention to the trend line that we had, the initial trend line, which is the the larger trend line here. Okay, now you confirm that this trend has broken by what, if price actually break through the bigger trend line, which is the stronger trend line, right? So basically that's what we want to be expecting. That's why we don't want to rush a sell. Okay, at this point in time, price has closed below. Now there are people who are going to sell directly from here, just aggressive entry. They'll just take their short trade because it has broken, and maybe target zones like this previous low here. Maybe they just take their short trade. Now this is just a complete strategy. I'm not just talking about trend line, but I'm also talking about the breakout strategy, right? While others could want to wait for price to maybe come back and retest, while you get, so it's just about knowing the kind of way you want to trade. Now you see how price got rejected here, right? So that's just a major way of trading. Now at this point in time, we know that the trend of the market has changed already from here, because we already have a change of character and price started creating lows. So at this time, what do? You now start looking for sell opportunities, right? So you can connect. Okay, you can connect like this. You simply connect, you just get those highs there, you get those highs connected like that, so that price comes, right, and then this will act now as resistance. Okay, so basically that's what we are going to be looking for. You see what happened here. Price came and rejected. Now if price comes and rejects around that zone, that is what, a potential sell. For those who enter base, whether using limit orders and all of that, you can still take your short trades, and then you are looking forward, lose previous lows as your first targets and all of that. Okay, so basically you see how price respect that zone, because this has become a resistance. And now what happened, price now finally breaks out. This is actually what happened last week, and this was as a result of the non-farm payroll. This was the non-farm payroll news that was released, and price happened to break and move to the upside. So basically guys, that's simply how you can trade trend lines. Don't complicate it. It's just a very simple strategy. Identify what your trend of the market, identify your troughs and your peaks, right? Those peaks we usually use to draw our trend lines, and then you wait for price to come back and hit the third time. You could enter aggressively or conservatively. So guys, thank you so much for watching. If you found the video helpful, give me a thumbs up. Make sure you subscribe to this channel by hitting on the subscribe button and notification bell. See you in the next video. Make sure you join our Telegram channels. The link will be in this video's description below, so that you can also get updates on our weekly analysis. See you in the next video.